All right. Well, good morning, everyone. Thomas Montgomery, happy Friday. We've made it to Friday, August 21st, 2026. We get together most weekday mornings at 8 o'clock Central to talk about the grant. We have a little bit of a different topic today, which I think you'll find interesting. In the background of my shared screen, we have matrixfunding.org. That is our resource site. If you go to matrixfunding.org, you can get information about the grant, how it works, training video, and really what the deliverables are falls into three categories as shown here. Through the grant, we provide everyone a free shelf corp with a unique business address. We use that to get everyone at least 250,000 in funding, which we're going to talk about here in just a second, our topic today. And then anyone that has not managed their credit successfully, we have recently added a free credit resource. Technically not credit repair, but yes, it repairs credit and there's no cost. We average, it's not too good to be true. And again, there's no cost, but we average about a 200-point increase. So this is the value proposition through the grant. If you want to participate, matrixfunding.org, you're able to click here to participate or here. But what I want to do is drill in to some details on this column right here. So let me bring my notes back up. So our topic today is business loan design. I have the pleasure of working with entrepreneurs on a daily basis, and I realize this is an overdue topic. So let's dig in. So if we'll just say you, and I realize you may be a referral partner and you're not looking for funding, you're helping others. But regardless, if you or someone's looking for funding to start or grow a business, we are going to need to put together what we call a use of funds. Now, this may seem intrusive. This may seem uncomfortable. This may seem unnecessary to you. It's just like, give me my goddamn money, right? Just where's my $250,000? But it's not going to work quite that way. We're going to have to go to the bank and explain to them what we want the money for. And it's going to fall into a couple different categories. And that's what my goal is today, is to educate on how we can set this up. So any of these are acceptable, but they're different and they'll be set up differently. So in no particular order, let's talk about different uses of funds, different business loan designs. One of my favorite and one of our most popular is a business acquisition loan. So what does that mean? It means we're using the shelf corp over here to go buy an existing business. Maybe that existing business is cash flowing, maybe it's not, doesn't really matter. But what we're going to use the money for, which in the industry is called use of funds, is to go acquire an existing business. So to no surprise, and I say that with a little bit of nervous laughter, if we are going on record that our use of funds is to acquire an existing business, we're going to need to know what that existing business is. We can't just say, oh, we want some business. If that's the case, we're going to have to do a working capital loan, which I'll get to in a moment. But separate that for the moment. So a business acquisition loan is for a specific business acquisition. Furthermore, I often have clients, grant participants that say, well, I want multiple businesses. I want two, three, four. I was on the phone with the gentleman yesterday. He wants five. He wants to go acquire five businesses. And I asked him, do you want to do one at a time? No, I'm a big thinker. I want all five now. Okay, that's going to be five different loans. We're normally not going to find a lender that's one lender that's going to do five different acquisitions under one loan. It doesn't make sense. If they're different locations of the same business, of course. So business acquisition loan, I think it kind of makes sense what it is, But if that's what we're going on record for, we're going to need information about the business that we're going to buy. Questions, comments, concerns on that very simple start point. There's more to this list, but I want to start there. Okay, I think that's the easiest to understand. Now let's go down to number two. Let's say that we're going to do commercial, and I realize some of these could be in combination of one another, but let's just treat it simply one at a time. Commercial real estate. So we've talked about well, I mean, you know the benefits of owning real estate, right? And we recently launched our 100% real estate financing. And in fact, we're still on track. We signed the paperwork yesterday. We're closing on August 31st on two distinct real estate properties that we're using our own program for. It works. 100% real estate financing. No owner contribution, or no buyer contribution, I should say. So, real estate financing is another type of use of funds. And so, with it, we do need to know the address that we're going to buy. So, just like if we're going to say we're going to go buy a business, acquire a business, we need to know what that business is. If we're going to go buy real estate, to no surprise, we need to know what that real estate is, right? It's specific. These are specific uses of funds. I'll get to the general category in a minute, which I suspect is what many of you want, but I need to go through these different categories. So again, I know that there can be some overlap here, but let's look at them individually first. So we put the word commercial in because we're not a residential loan broker. So we're never going to be able to facilitate residential real estate. Now, could we buy a residential property through the business? Sure, because we could say that it's for Airbnb or fix and flip or what have you. But it would not be it would be bought in the business's name. Otherwise, you need a residential mortgage loan officer, which is not what we do. Okay, we good so far? Okay. Who can think of another category? What's another category other than a business acquisition loan or a commercial real estate financing? I guess we'll add the word loan or financing. What's another one? And Charlie's got it right. Yeah, working capital. And I alluded to that. So working capital is different. Working capital is we're wanting to borrow cash, and that cash is not going to the seller of a business. That cash is not going to the seller of real estate. That cash is going to go into our account, and then we're going to use it for business uses. So we can see that there's differences here. Now, so often I'll have clients, grant participants that say, well, I'd like to have money to acquire a business or maybe to get some commercial real estate, but I haven't identified the business yet, or I've not identified the commercial real estate yet. So how about we just do all working capital? Well, there's certainly some benefits of doing that way. And the truth is, we can do a complete working capital loan and then turn around and use that money, that cash, to go acquire a business or buy real estate. And then there's not a lien against what we bought. But if we go get a business acquisition loan, guess what? The lender is going to put a lien against the business that we bought. If we do commercial real estate, normally there's going to be a lien against the commercial real estate we bought. But if we can borrow enough working capital, we can have the cash and then the freedom to go use that for other purposes. And those other purposes aren't declared, they're not identified to the lender. Therefore, then any businesses we acquire or any real estate that we buy would be unencumbered. It wouldn't have a lien against it. And that's pretty good, right? Because let's say that we did that. Let's say that we used two different scenarios. We either went and bought a piece of real estate, or we got a working capital and then use that money to buy the real estate. Well, in that second scenario, we are getting a loan in either case, and we have to pay it back in either case. But now we bought the real estate and there's no lien against it. So actually, we've just doubled our borrowing capacity because now we have the deed that's unencumbered, unrestricted to that real estate. And if we wanted to borrow then against that real estate, we can actually go do so. So we've kind of doubled our borrowing capacity. Theoretically, the same thing on the business acquisition. If we go get a business acquisition loan, we said that that business is going to have a lien against it from the lender. But if we get a big working capital loan, and then happen to use some of that money to acquire a business, this business that's acquired isn't linked to the security interest from the original loan. We own this free and clear, and it's quite possible then we could use this business that we just acquired to go get more financing. So there certainly are benefits of doing 100% working capital loans and then using that money for other purposes afterwards. But there's other considerations we have to consider. So let's drill into that. So we'll call this 3.3a. So if we're going to do a working capital loan, that does not mean that we just go to the bank and say, give us 100,000 or 250,000 or a million. We can't just spout off some number. We're still going to need to give them a uses of funds. So we'll still need to tell them what we're going to use it for. So if we tell them that we're going to use some of it for this, then it becomes a hybrid. If we tell them we're going to use some of it for this, then it becomes a hybrid. And we've lost that advantage, right? Because now these acquisitions, these purchases are going to be part of the loan, and then there's going to be a lien against them. So there has to be some craftsmanship to the uses of funds if we're not going to disclose this. The second point, and I referenced this a moment ago, is in many cases there's going to be a combination of, we'll call it, of uses. So, for example, again, we're buying, and I keep saying this not to brag or anything else. You can do the same thing. We can get you 100% real estate financing too. So it's not that we're doing anything that you can't do as well. But we're buying two properties closing August 31st. We had the final city inspection. We had the separate appraisals already, the separate third-party inspectors already. But yesterday, the city inspector came in. So there's a process to buying real estate that you all probably know, or if you don't know, you'll find out pretty quickly if we're going to go buy some real estate together. And so there's steps along the way, and there's things that we might find out with that real estate. So, for example, in one of the buildings, there's several buildings that we're buying of the two different businesses, but in one of the buildings that we're buying, it has an office in it, and that office has its own HVAC system. And in that one office with that HVAC system, it has an aged furnace, an aged air conditioner, and an aged water heater that won't pass inspection. So they're gas and I guess there's leaks. I'm not a real technical person. So what's the point? It could very well be that if you or a client of yours is wanting to get real estate, we might still need some working capital because there might be some needs for some cash along with getting the real estate. Even if the real estate's 100% financed, which we can do. We're doing two of those, again, closing on August 31st. But does that mean that there won't be any other expenses? What about if we need to do some improvements to the building? And I know we've already hired a contractor that's getting us bids to do improvements. So it's not uncommon for there to be a combination of the use of funds. The most important thing that I'm trying to convey to each of you this morning is that while we guarantee this is a minimum, the 250,000 is not a maximum, it's a minimum. And it can be combined based on what you want it. And it even says here on the website, right? We can get business loans, we can get lines of credit, we can get business vehicles. I didn't mention that. I'll go back to that in a moment. Business real estate we were talking about. So it's okay. We'll put together with the grant participant what it is they want. So they're not being told how they can use the funding. But what doesn't fly is, I don't know. We can't go to a bank or to a lender and say, I don't know. That doesn't make sense. You don't go borrow large amounts of money for I don't know. So the great thing is our responsibility and our competency is to build a loan package that has the proper documentation. But some of that has to come from you, the client, the grant participant. What are you really wanting? And you might be surprised. There's a lot of people that really don't know what they want. So, who has questions on what we've covered today? What we've covered today is that we have the grant. The grant is available to help anyone get at least 250,000. We provide a free shelf corp. We provide a free commercial address. If they need help with credit optimization, the funding minimum, the minimum is 250,000. Can we help with more? Absolutely. But that's the why is it the minimum? Because there's a grant. And when you fill out grant paperwork, you have to commit to certain things. And we had to promise a certain minimum level of performance. So anyone that's going to participate in the grant needs to accept at least 250,000, and then we need to deliver at least 250,000. But that's the minimum. It's not a maximum. It's the minimum. What if I need a lot more? We're working with MJ, who he may be on here this morning. I'm not sure. We have 724 of you on. I don't think he's on. But MJ, we're working with him on a $7.2 million capital raise currently. We're pretty close to the end of it. So can it be larger? Absolutely. But we just need to be sophisticated enough to understand that we're going to need to be working with you on what's called the use of funds. And we can do the packaging and the cleanup, and we're on your side, so you can share with us whatever you need to, frankly, and we can help package it, so it looks good to the lender. But we are going to be asking some questions. What do you want the money for? If it's a true acquisition, then we need to identify the business that we're going to acquire. I don't know what the business is yet. Then it's not going to be a business acquisition loan. Or we need to wait until you find it. Commercial real estate. Don't know what real estate I want yet. Then we need to wait, or it's not going to be a real estate loan. Working capital. We're on to something here. Working capital can be our catch-all, but that still doesn't mean that we can just say, oh, I don't know what I need it for. We're going to have to give an explanation to the lender. And that's fine. We can help with it, but we're going to have to pick your brain first. If you say I need $1 million, then let's figure out what we're going to tell the lender you need the $1 million for. All right, so Gilbert's asking a rather astute but frank question. Do you have to use the money the way that you say that you plan to use the money? There's a little bit of leeway in that. It depends. So what we didn't mention, and let's go ahead and scroll down a little bit. What we didn't include we would call equipment financing. And so equipment financing could be true equipment, like machines or what have you, or it could even be business automobiles. I know you wouldn't think of a business automobile being quote unquote equipment, but that's the kind of the category it falls in. It means that it's typically a larger capital purchase. There's a serial number or a VIN number, something that's a unique identifier. And then, of course, these items can be used as collateral for the loan. So let's get to Pauline's question, which is a good one. I feel like she's asking what's our recommendation? If you're flexible, what would be our recommendation? So let's do that. Recommended loan design. So we'll do whatever you want, but let's just cover what we'd recommend. Uh, Most businesses need an office, and I know we have the free commercial address and that, but owning real estate makes a lot of sense. So I would strongly consider buying a piece of, or I recommend buying commercial real estate. Do you have to? Absolutely not. We got 100% financing available. It's a great way to build wealth. You can get an office building that already has occupants. One of the two properties that we're buying is an office building, and listen to me carefully, it's fully occupied. It's fully occupied. It's cash flowing positive from day one. We're closing on August 31st. All of those tenants are going to pay us their monthly lease or rent on September 1st, and we won't have to pay our first mortgage payment until later this year. So commercial real estate is smart. Now you may not want the headaches, and I understand that, and it can be a distraction, and even for some of you, it caused some mishap in schedules yesterday. But if I were to put together an ideal or recommended loan design, can't go wrong with real estate. Even if it was a single family house and you said, "Oh, it's for Airbnb," what if you stayed in it yourself and then you were able to write off all the expenses? But don't have to do that, but recommend. Second, company car, I think, is a no-brainer, right? We've done it multiple times. Picture of our company car, one of our company cars is the McLaren here. Why wouldn't you want a company car? It's fully tax deductible. If it qualifies for Section 179, you can do the accelerated tax depreciation, and you need transportation anyway. Most of us do. So I would include that. And then, of course, working capital. Working capital is one of those that we need to figure out how much do we really need. Some people are a little less sophisticated than you and I, and some people will just spout out a number. It's like they pull it out of an orifice. Well, no, we should make a list, a shopping list. What is our use of funds? If we were to have a blank check and we were to go buy all the things that we want to buy, let's make a list of what those items would be and what each item cost, and then we add it together, and guess what? We get the amount we want. So often people aren't like you and I. They just pull a number out of an orifice, and then we ask them to substantiate it, and it's like a deer in the headlights. No, put together the list. Here's what I need money for. Here's my shopping list. And if you add everything on your shopping list, it'll give you the number of what you need. Right? Makes sense? All right, KE brings up a good point. Yeah, when you get commercial real estate, there's other expenses. So, for example, insurance, right? You're going to have insurance on the real estate. That's not going to be part of the real estate transaction. So, KE's right. So, that's why I mentioned working capital often will be used in combination with these others because often we're going to need working capital in addition to. All right, let's see. Timothy brings up a point that he really doesn't want to do commercial real estate. He wants to do business acquisition. So that's a good point. So we'll make that, I guess, and or we'll change that. I'm with you, Timothy, and for those of you, and I guess us walking the walk too, when you can go, and sometimes it's a combination, right? So if you go buy commercial real estate, like we're doing, like you can do, and it's already revenue producing, what are you buying? Are you acquiring a business or are you buying real estate? Well, technically, we're just paying the value of the real estate, but really it's like acquiring a business, right? You get a building that has tenants that are paying already. That's generating cash flow. It kind of feels like you just went and bought a business. It feels like a really good decision, doesn't it? But technically, if all that you're paying for is the real estate, then it's not considered a business acquisition loan, even though it is kind of a business to you because all those people are going to be paying you their monthly rent payments. So this is how we would normally recommend it if you were to if you had a blank slate and just said how could we structure it? I would say let's build around something. Build around something around either a piece of commercial real estate or a business acquisition. Don't have to, but would recommend that being kind of the hub. Who wouldn't want a company car? Just makes sense, but you don't have to do it if you don't want to. We can do high-end cars. We've done in company name, we've done the McLaren, the Lamborghini, the 911, the G-Wagon, the Escalade V. So you can get multiple company cars. If you need a dump truck or an ambulance, whatever it is you need, we can get it through the company name instead of personal name, and then ultimately working capital. But working capital, we want really just enough working capital. I think some people, again, a little less sophisticated than you and I, they just want lots and lots of working capital. Well, you got to pay that back, right? So, unlike a business acquisition that makes you money, or unlike commercial real estate, which should make you money, we really need to be thoughtful about working capital. What are we going to spend that on? And is our use of funds going to make money? Because, we have to pay that loan back, or they're expecting us to pay it back. So, the more that this is, generally the better. The more this is, the bigger the write-off. But working capital, you just want just enough, just enough. You don't want too little, but you don't want too much. But we'll work with you on whatever that is. So, as far as moving forward, kind of wrapping it up on Friday. So, for any of you that are not participating in the grant, your first step is to enroll in the grant. So, you go to matrixfunding.org. Crazy simple. If you want to watch the training video, you can. But right here, it'll take you just a couple minutes. You can get plugged in. So that way you are in the system. And then at that point, then we'll be reaching out and working with you on doing these things. We'll get you your shelf core. Provide you your free commercial address, free registered agent. We'll start working on the funding if you need help with credit. So all those things will happen once you enroll. If you find yourself and you're already enrolled and you're stuck or you don't know what you need to do next, well, that's too bad. Then come over here again to matrixfunding.org and call us. Our phone number is right here, 903-200-8781. Give us a call. One of our intake coordinators will answer the phone, a live person, guy or gal, and they will get the message and then they'll get you to the right funding attorney or paralegal based upon what you specifically need. So if you've not enrolled, go to matrixfunding.org and enroll. If you're already in the system but you need help, then call in. And then we had a question on the Opportunity Fund. That was Daryl. So also on matrixfunding.org, I scroll down here and then you have information on the Opportunity Fund. Really simple to participate. There's a training video right here, and then you can actually enroll in the opportunity. No cost, of course, right here. So this is really meant to be a resource that will get you what you need. I see William is asking about the Chapman grant. Yep. So we can go there if you want. So there are lots of different types of funding and financing, everything from Bank of America, Wells Fargo, JP Morgan Chase on down. But there are some unique types of funding and financing, and the Chapman is one of those. The good news is that it's not through a bank, so we don't have to meet the normal underwriting criteria. So that's a good thing. The bad thing is it has a low cap. The maximum it'll go is 250. The minimum's 30. So we can use it for real estate, but granted, how much real estate you got to buy for 250? Not a whole lot, but 250 for real estate, equipment, inventory, working capital, equity injection, so forth. So yeah, don't get too hung up on that. We reference that because that is a unique type of funding that we geographically qualify for, as well as you will because of where your address will be. But lots of different lenders will get you placed with the right lender. All right, let's see who else. Uh, yeah, Daryl says he needs help. Okay, so Daryl, again, just give us a call, 903-200-8781. Just leave a detailed message with the intake coordinator, not a voice machine, but a true intake coordinator person, and we'll get you to the right funding attorney. Let's see. Question of how to get a real estate loan. So yeah, regardless of the type, so there's not different processes to get these different types of uses of funds. We all start the same way. We go to matrixfunding.org, and then we come over here and we participate in the grant, and then we can help you build the capital raise the way you want. So there's not like different links, like which link do I need for each purpose? Not that. See if we can stop that. All right, that was a distraction. All right, and then let's go back to where we were on the messages, see if there was any other. Question about branch offices. Yes, yes. So we do have the affiliate program. This is where we recommend people start, but we are opening branch offices. That's the next step up. I would recommend get started as an affiliate, and then we can talk to you about opening a branch office afterwards. You can become a affiliate free and easy right here. Question about working capital for a car lot and a tow truck. Sure, yeah, don't get bogged down. We don't need to go through a million different scenarios. Yeah, so uh, enroll in the grant, and then we'll be able to build out your use of funds and the support documentation. That won't be a problem. All right. Well, I think we've covered it. We're 2 minutes over. I apologize. Good to visit with you all, but I just encourage you. You're kind of irresponsible to not take advantage of the grant, in my opinion. Who couldn't use 250,000 to start or grow a business? And again, that's not a maximum, it's a minimum. So come over to matrixfunding.org. Real easy to get plugged in. If you specifically need to speak to someone, give us a call. And we'll see you back Monday morning, same time, same place. Thanks, everyone. Bye bye.